Good afternoon, everybody. I'm on the East Coast, so it is the afternoon. My name is Dale Brethauer. Today, what I'm going to be talking to you about is the importance of the exit, not the entry. Most people you hear talk about, you got to get in here, you look for this, you enter here. I'm a believer that the exit, your exit strategy, can increase your profits if you're already profitable. It can take you into the profit zone if you're not in there just yet. It's just the absolute best thing. It's finishing off the trade the right way. The tool I'm going to be teaching you today is Fibonacci extensions. There are two tools that I use in my trading. I like to keep things simple. I've been doing this for 35 plus years now, and I do this for a living. I'm getting to the point in my life where I really enjoy teaching other people how to be a success in this very, very, very tough arena. The two tools I love the best are the Fibonacci extensions and the regression channel. Today, I'm going to be focusing on the Fibonacci extensions, and this is really going to just be an educational webinar. I have nothing to sell. And I listened to some of the speakers, and I'm thinking to myself, wait a second. I do this for a living. I make good money. I know how to teach other people how to do this. Why am I not charging $5,000 for my information? I don't. Because like I said, I'm at the point in my career where I think there are so many people that are interested in this subject and totally miss the boat and end up losing. And I'm trying to turn that around. I'm trying to show you how to keep things simple and how to, you know, slowly build up an account. Okay. I've been a trader for 35 plus years, so I'm not a teacher that doesn't do. I'm a doer that now teaches. I run a hedge fund manager. I'm the founder of www.optionsinfinity.com, and this is, I believe, and our staff looks at all our competition. I think we got the very best stock and option education website available today. At the end of this webinar, what I'm going to show you is how to become a free member. Yes, a free member to our website. Learn some things. I've got a lot of webinars on there where you can learn about options if you've never traded. You can learn what your proper trade size should be if you want to trade like a professional. There are 127 free webinars that you can see as a free member, and I'll show you that at the very end. But for right now, just relax. I got nothing to sell. I'm going to teach you one of my two favorite tools, and that is Fibonacci extensions. In this webinar, you're going to learn when to exit. I'm going to show you what a measured move is and how you use it, because you need to understand a measured move, because that triggers the Fibonacci's. What is the Fibonacci ratio? Exit trades using the Fibonacci's, the 127, the 161.8, the 261.8 extensions. I'm going to show you that you can use this in any time frame. I'm going to give you some trade examples. I'm going to show you some actual trades I've made in the last couple of months. Then I'm going to be going over my trading record, and at the very end, we'll go over to my website and I'll show you how to become a free member and everything you will have access to. Now, I have the question box up. So as I'm going through, let me see, as I'm going through, if I see any questions, I will stop and answer them. And right off the bat, Michael says, you've been doing this for 35 years. How many years have you used the fibs? Actually, I really have. I learned about the fibs and I've been using them all the time now, probably, Michael, for only the last 15 years. And boy, what a difference it has made in my training. In my trading, there's really two things. One, Renee mentioned that a webinar, actually it was a week-long seminar I went with Dr. Van Tharp, and he really taught me not the psychology of the market, but your psychology as a trader, and how you have to check your ego at the door and how you have to move forward. Fibonacci's 1, Dr. Van Tharp 2, the regression channel 3. Good question, Michael. Okay, so I mentioned earlier, most stock market literature focuses on the entry, but exiting trades is what defines your success. Exiting trades is what defines your success. And that's how I use the Fibonacci extensions. Now there's a common quote, you want to cut your losses short and let your profits run. Well, then that begs the question, well, what do I do when I let my profits run? At what point is that enough? At what point does is it time to take your profit? Okay, I had another question. Let's see. I have to expand this box. Let's see if I can do that for a second. No, that doesn't do it. Let me see here. I'm scrolling through here. Let's see if I come down. Okay. Please guide us on how much profit percentage I should grab before exiting. Is it depending on the stock or the option? Absolutely not. And I do not look at a percentage to grab. I look at the Fibonacci percentages, the extension percentages. Whatever the percent gain has been, so be it. Okay, I don't look at percentages of stock to exit. Michael comes back and says the fibs are the best thing he's seen for calculating the risk and reward before you actually enter a trade, and that is so true. That is so true. Okay, let me continue on, because the next question is how do you determine the extensions? So let me teach you that. First of all, how do you know when to exit after a profit? All right, 3 common ways. 1, you get a MACD crossover and you exit. 2, you get you've had a nice profit and you wait for a 3-day trailing stop. Okay, that's cool. That's cool. And the third one is, you know, when it goes below the 20-day moving average, you get out. By the way, if you're looking at a moving average that really works, the 5-day is what the big institutions watch. 5-day is what the big institutions watch. And you know, pull up a chart and see how often it'll come down to the 5-day and bounce off. Come down to the 5-day and bounce off. When it finally crosses that 5-day, look out, look out. But I want to show you these 3 common methods to exit. And we'll take an example here on PepsiCo. And we assume you got in this trade and you're making a nice profit and you say, wow, this is cool. Okay, the first thing I want to do is exit when I have a 3-day trailing stop. That's going to be right around here. It's going to be right around here. The next one I'm going to look at is when I've got the MACD crossover. That's going to be right around here. That's going to be right around here. And the third one is when it crosses below the 20, when it closes below the 20-day exponential average, and that's going to be right around here. So all those are about the same. But notice the difference from the very tippy top to that point there. What do I have here? I have a Fibonacci extension of 161.8. And that's where we exit. Notice we're exiting as the stock is going in our direction. We don't wait for it to turn around and give some of that profit back. Okay? All right. So if I look at that, this was the PepsiCo trade. Exit based on the MACD crossover, I got 0.72 points. 3-day trailing stop 0.32, 20-day exponential moving average 0.58. All profitable. That's cool. All profitable. But we gave so much back because if we exited based on the Fibonacci extension, that would have been 3.35 points or 150% for an at-the-money option. That's what we want to do. That's what we want to do. We want to capture that profit as it's going in the direction. Okay, the first thing we need to know is we need to know what is a measured move. A measured move is when it has been going in a certain direction and it turns around, it makes, in this particular case, we're looking at a up measured move. It came up, then it pulled back, and it made a higher low, Then it was confirmed by making a higher high. Okay, that is a measured move. That's the classic definition of trend. An uptrend is higher highs and higher lows. Higher highs, higher lows. Okay, you have a move up, it pulls back, you have a higher low. It crosses over the previous high, you have a higher high. As long as it stays in higher highs and higher lows, you have an uptrend. You stay with it. Okay, just the opposite is true for a downtrend. For a bearish measured move, you have lower lows and lower highs. It comes down, it pulls back, it has a lower high. Then when it crosses past the low, it confirms and makes a lower low. Classic definition of trend. And this is a downtrend, and it will continue on as long as you stay with lower lows and lower highs. Okay, the Fibonacci ratio, the golden ratio. First of all, the Fibonacci is derived from a number sequence, and the number sequence was Fibonacci's. And what he did, he was a mathematician, and he added the current number to the previous number to get the next number in the sequence. 0 plus 1 is 1. 1 plus 1 is 2. 1 plus 2 is 3. 2 plus 3 is 5. 3 plus 5 is 8, and so on and so forth. Okay? Then as a mathematician, he took the preceding number divided by the next number in line and came up with 0.618. That's called the root Fibonacci ratio. The root Fibonacci ratio. Okay. Now, as a mathematician, he took that number and he looked at the square of it and a square root, and then he took the reciprocals of that, and these are the extension numbers that we use, excuse me, to exit a trade when we have a Fibonacci extension. Let's talk a little bit more about that root Fibonacci ratio. It is seen throughout nature. It's seen everywhere. As you go up the stem of a flower, the leaves grow at a proportional distance of the ratio. The spiral of a seashell are in proportion to the ratio. Okay, here's something I want you to do. The distance of the human forearm to the hand is proportional to the ratio of the hand, okay? My hand is 7.5 inches. I'm 6'5", so I've got a fairly good sized paw. It's 7.5 inches. From my elbow to my wrist, my forearm is 12.3 inches. 0.75 divided by 12.3 equals 0.61. Well, what is that? That's the golden ratio. That's the Fibonacci ratio. So are all the major bones in the human body. They're proportion to the Fibonacci ratio, et cetera, et cetera, et cetera. It's seen throughout nature. So doesn't it make perfect sense that the markets would move in perfect harmony with nature? I mean, what is the market? It's human nature. It's fear. It's greed. Okay? So it makes sense that that the Fibonacci's hold true. Fibonacci extensions may be used in any time frame, any market, any movement, up or down. So what I'm going to do is just go through a couple examples for you. We're going to use the Fibonacci extensions to take profits on an upswing or a downswing. The first example I have is a weekly trade made in Amazon using the Fibonacci extensions, and that is an up trade. Then we're going to look at a daily, and that's the euro versus the dollar, the Forex works there too. Then we're going to go to a 1 hour, and we're going to look at the iTrust for silver. Then we're going to go all the way down to 5 minutes and look at the FAS. Okay, here is a week chart for Amazon on a plus move. Okay, here was the low. We had a move up, then a move down. That move down was a higher low. Then it confirmed a new high here. That confirms an uptrend. You put on the Fibonacci ratio right here. Here's the 127. Here's the 161. Here's the 261.8. Now, I use Thinkorswim. I'm not associated with them. I just happen to think they are one of the best trading platforms out there today. I do a large volume and I get tremendous commissions. So I love Thinkorswim. But the Fibonacci extensions are put on automatically. And if I have time, I'll go over to my Thinkorswim platform and show you how easy it is to do. But one thing you know is when it goes past the 127 and continues to move on, there's a good chance it'll probably go to the 161.8. At a 127, it's either going to bust through there, it's going to go sideways, or go down a little bit and then come back up. How do I know it's going to come back up? Because we now have made another higher low. The trend continues. Okay, the trend continues all the way up to the 261, and it pegged this right here. We had a down move after that. This was an Amazon week chart, taking it from, let's say we got in here at 775 and got out at 975. Not a bad trade, not a bad trade. And that's a week chart. And we're looking at 1, 2, 3, 4, maybe 5 months, okay? Here's a Forex daily, up move. Here's the first measured move. Okay, there's the 161. Here's the second measured move, the 127, the 161, the 261. Here's the third measured move, the 161. The more measured moves, every time you have a measured move, you can put on another Fibonacci. And now what you're going to try to do is look for a cluster. Where are the Fibonacci's clustering? And that becomes a great place for you to get out. Okay, here's the first measured move. Takes it up to the 127. Sure did. Sure did. Then it blasted through the 161 and ended up at the 261. It paused there at the 161 of this measured move, pulled back and then pushed all the way up. Okay, so we've seen it work on a weekly. We've seen it work on a daily. Here's an hourly chart with the silver iTrust and an up move. A lot of gaps in here because silver's traded 24 hours a day, but this only shows the you know, from 9:30 to 4 o'clock when the U.S. trading markets are open. But here's a measured move right here. We put on the 127 and the 161. Bam! I mean, the more you do these, the more amazed that you will get at how accurate they are. Okay. At the 161, good place to exit, because we know at the 161, if it doesn't blast through there, it's going to either consolidate or drop a little bit. It did drop a little bit, but then it pushed back up to the 261. And the next measured move, there's the 127. There's your clustering. There's your clustering. Bam. Look at, that's within a couple ticks. It's not close. It's right on. Okay, good question. How do you know when the next step up is going to be? Tell you what I'm going to do. I'm going to actually, let me go over to my Thinkorswim account. And here's the SPX. And let's just go through this. I got the Fibonacci's down here, but the first thing I usually do is what I want to do is put on a trend line. So I go from the low to the high, to the higher low, to the to this point here, to this point here. Okay, and let's just put some Fibonacci's on here. Okay, there's the tool. All you do on Thinkorswim is just click, drag, click, drag, and click, and they're put on automatically. Whoops. Okay, so let's say okay, what do we know at the 127? If it blasts through there, it's a good possibility it's going to go to the 161. Pretty doggone close. It went to the 161. So now you say, okay, what do I do next? I want to exit. I want to exit at the 161. But I've got a feeling that it might be going a little bit higher because the 261 pushes up around here. There's the 261. Okay, what can I do? Okay, so I'm out. So let me take this away, and I can do the Fibonacci extensions on the way down. Let me go from here to here, back up to the lower high. I know that I'm in an uptrend. I know that there's the 127. What a great place to get in. What a great place to get in. Okay, and take it up. Take it up. You can use the Fibonacci's going up and down. What trend are you in? How low, when it has a pullback, how low is it going to pull back? When can you get in? All right. So this is actual stuff, okay, on my Thinkorswim. Okay, the last one I want to show you is the FAS, and this is a downtrend. This is a downtrend. This is a 5-minute chart, okay? Came down, came up. When it came right here, what did that what do we have? We have a double top that's confirmed. You can use the Fibonacci retracement for that. I waited, and I waited till it came down, made a lower high, took it there, took it down to the 127, waited, got back in, took it to the 161, waited, got back in, took it to the 261, the clustering of 261, 127. This all happened in less than a day's time. It's extremely powerful, extremely powerful. And with Thinkorswim and these other trading platforms doing the work for you automatically, you know, how can you not do it? It's just a click and drag. It's a click and drag. Okay, question. Yeah, a lot of nail biters on the way to the full extension. Absolutely. And a lot of people don't go there. They don't go there. They take the 127. Look, you can use Fibonacci's to pinpoint when to get back in. You take the 161. That's okay. Two very nice profits. You don't have to go all the way down here and go into nail biting territory. That's fine. That's fine. One of the things you need to do as a professional trader is not let the market trade you. You trade the market. When you feel you have an edge, that's when you trade, not before. Okay. If you are in nail biting territory, one, you got too much invested in the trade, or two, it's not working in your favor and you probably ought to get out. Taking losses and embracing losses is one of the keys to success. Okay, now I'm going to show you some actual trades. And all these trades happened in the last month. The weeklies happened in the last week. Now, I'm showing you all profitable trades. Well, that's not reality. It's not reality because, like I just said, you have to embrace losers. You have to embrace losers. But my trading strategies and the ones that I have for sale average around 65–70%. It's almost unheard of in the market today. But it's 65 to 70%. You are going to have losers, and you're going to have a string of losers. So you have to adjust your, you know, you don't want to put everything in one trade because darned if that won't be a loser. Okay, you have to treat this like a business and stay with it in the long run. Here's a question that I don't know how to answer. It says, does our software work on the Thinkorswim? I don't know what software you have. I can't answer that one. Okay, let's take a look at the Amazon first of all on a directional call. And this was I'm looking at the one year weekly, and we looked at this before, and there was the 127. Here's the 161. If you want to take it all the way up here, but look at it. This is a weekly. If you go down to the daily chart, you would see this working its way down in the Fibonacci. You get out, you see it working its way on the Fibonacci. Okay, was able to grab a call right here, get out at the 127 for 80%. Was able to grab a call right here, getting in here, getting out here, 55%. Was able to get a call right here, taking it to right here, 123%. That's an actual trade. Here's an iron condor. Here's an iron condor I put on the RUT. And it's right around this area right here. You can see this is when I put this on. And we were heading down. Okay, an iron condor is you're gonna buy a bear call spread and a bull put spread. All right. And as it was coming down, I knew that it came down to the 261. So right around this region, it probably has fully extended. Okay. And at this point, what I chose to do was to get out of the bear call side of the iron condor. Then it came back up and hit the 127 on the reversal, and I got out of the bull put, exiting that trade for 70%. See how you can use this? Here's a bear call spread on the RUT. This is something that we got in at the end of July. You can see it came down, made a measured move right here. Okay, made a lower high, excuse me, a lower high and then a lower low, confirmed that, came down to the 127, strong, went through the 127, 161.8, bam, you're out, 105%. Here's two on the SPX weekly in the last week, okay? This was the trade that we put on, and it came all the way down to the 161. This is the regression channel. Remember I said there's two tools I use, Fibonacci extensions and the regression channel. When those two jive together, this is at the -2 and this is at the 161.8, I knew it was time to take profit. Took profit on that put, 123%, had a turnaround, grabbed it, took it to the 161, got out, 61% on the call side. All right. Like I said, you have to embrace losers. You have to know that any trading system will have losers, and if it goes against you, one of the rules I use, I don't look at a percent loss. I never put in a stop loss. I always have a mental loss, a mental stop, if you will. And one of the key things I look at is a reversal of a measured move. Okay, if I'm looking at a daily chart, I'll go down to the hour chart, and if I see a reversal of a measured move going against me, I will exit. That's when I exit. Do I take losses? Absolutely. Do I control those losses? Absolutely. Do I sometimes look at that Monday morning quarterbacking and saying, man, if I wouldn't have gotten out, I would have made a killing? Yes. Does it bother me? No, not at all. Because I've been doing this long enough that I know when I get out, I have executed that trade the best I could, and there's no reason to look at it again. Let's move on. 2014, I started what is now known with all my mentees as a double up challenge. The double up challenge is what I was trying to do, is take a $25,000 portfolio and double it up in a year. Okay, and you can see that in 2014, I earned back 151%. You say, wow, that's good, Dale. That's really good. Well, that's exceptional. That's exceptional because I put no more than $1,000 per trade. I put no more than $1,000 per trade. Okay, so on a $25,000 portfolio, it returned 151.4%. On a per trade basis, it returned about 25x. And all these are based on the trades released on my nightly blog. Now, the market in 2014 was okay. It returned 11.4%, and it's about what it does on an average year after year after year, even including 2008 drop. Okay, So I continued in 2015. I got 85%. Well, I didn't quite get the double up. 2016, 137%. This year to present, 77%. Okay, so how do you learn more? How do you learn more? What I want you to do is go to www.optionsinfinity.com. And here it is. Okay, this is the home page, and you'll see right off the bat it says start making smarter option trades free membership. Click the free membership. What it's going to ask you for, it's going to ask you for your email address, your first name, and what password would you like to set up. If you lose your password, when you hit the login, it'll have a little link down at the bottom says click here to if you forgot your password. Okay, sign up for a free membership. Okay, here's just some of the things that that you can see. Here's Options 101, the leverage of options, how to set up your charts, what's your proper trade size, what's the psychology of trading. Let me know about the regression channel, Fibonacci's and measured moves, macro MACD. This is a daily version of the weekly MACD that I have come up with. How do I trade credit spreads, the weekly options? This is all free. This is all free. Join up here. All you do is click on free membership, and there it is. What's your name, your email, and what's your username? What do you want? Okay. Now let's say okay, so let's say you're here and you just go all around here and see what's free, what's available. There's all kinds of things that are available for you to learn absolutely for free. Let's say you want to, there's two programs that I mentor people with. Both these programs deal with credit spreads. One is called Option Pro, the other is called SPX War, Weekly Option Regression. Both of these are based on the regression channel and the Fibonacci extension. The SPX War is trading the weekly options. The Option Pro is trading the longer term options. So for those of you that are working or don't want to watch the market all the time, Option Pro is for you. For those of you that want something a little faster paced, SPX War is for you. All you would do is click on here. It takes you then to the Option Pro homepage, and here's some of our latest results. These are our latest credit spread results. Okay. Now, and here's some teaching. Here's me talking to you about what I do with Options Pro. Here's some of the system stats. There's only about 2.33 trades a month. It's not a high-paced trading strategy. The average hold time is about 13 days. Yeah, we got about a 78% return right now. Here's what you get. You get a 4-part credit spread system mastery course webinars that are sent directly to you. Every night I do a nightly trading session review, usually only about 5 minutes, but every night after the market closes, and that's posted on the website. Get you up to date on our latest trades, how it's performing. When I see something, I send out a real-time text and email alert. I am not a registered investment advisor or a licensed broker. Therefore, when I send out a real-time text or email alert, it basically is what I am doing. You have to look at it and decide you want to pull the trigger. Okay. And then once a month, I have a Q&A session. And all that is, I got to increase this price. This should be $999. I have people making a killing with this. You saw the kind of results I'm getting. $99 a month. You can cancel at any time. It's totally up to you. The other program I have is the SPX, and you know, just to show you some of the returns I've had on the SPX. Here's an interview with one of the members. You don't have to listen to me. You can listen to one of the members. Here's some of the returns making on the weekly options. Okay, but the biggest thing today, the biggest thing I want you to do today is just become a free member. There's no obligation. You just send us your name and email address and what password you want to set up, and you go ahead and you just peruse the website, see if it makes sense for you, see if you like my trading strategies and the way I teach, and you know, decide if you want to become a member. If you don't, if it's not for you, no problem, no problem. And after listening to some of the talks today, you might want to get in quickly before I increase the price. But I don't have any plans on doing that anytime soon. So that is what I've got, Renee. You know, like everybody to sign up as a free member, www.optionsinfinity.com.